Hi everybody and welcome to your TorFX weekly market update. I'm Nathan Gray. I'll be your host. It's the 30th of August 2016. It's Newsweek, so we'll be breaking down the US jobs report coming out Friday night. We'll have a look at some gold manipulation, but first of all, let's take a look at the recent US GDP figures. Well, second quarter GDP was still weak. They were expecting a large bounce, and as it stands, the largest economy in the world is growing only at 1.1%. Now, Janet Yellen reacted with a speech at Jackson Hole, suggesting she's going to leave interest rates unchanged with no real raise in sight. However, she did say that the case for a rate hike has strengthened. So, in effect, it's not as strong as it was in December when they chose to raise rates, but it's not as bad as it was. And, of course, the Dow Jones rallied on what you would consider to be fairly negative news. And then Fisher came out from the Fed a few hours later and suggested that we could have the possibility of 2 interest rate hikes this year, that things were going along just swimmingly. And of course, what happened was the market completely dumped. And I'll just show you a chart so you can see what we're looking at here. As Janet Yellen was speaking and not raising interest rates, the Dow Jones goes up. And of course, Fisher comes out saying we could have an interest rate rise. In fact, we could have 2 of them, coming out with really good news for the economy, and of course the Dow Jones absolutely dumps. So we are living in this bizarro world at the moment. And if we continue to see, there's other strange news came out as well. If we have a look at the gold price, I'll just show you this interesting story here. For some reason, someone came out and sold $1.5 billion worth of gold in 1 minute, leaving many to suggest there could be some market manipulation. That'd be like owning 4 houses, I guess, in your own street and having your auctions on the same Saturday on the same weekend. It really doesn't make a lot of sense for the need to be selling it in 1 minute. So people are suggesting there is some manipulation going on in the market, which we've seen some of the larger banks already admitting to market manipulation previously. Looking ahead to all the major news events coming out this week, we start on Tuesday here at 11:30 a.m. with some building approvals on the Aussie, looking to be very flat there at 0%. Then we have some CPI data coming out from Europe and, of course, money supply on the pound. And as we move through to Wednesday, we're looking at midnight, we've got the consumer confidence on the US dollar coming out. Still, holding strong there at 97.2. Then your CPI data comes out throughout Europe with your flash estimates and your core CPI flash estimate coming out, still fairly strong. And then as we move through to the evening, we've got the automated ADP non-farm employment change coming out on the US dollar. The data dependency, which the Fed is talking about, suggesting that there will only be a rate hike if the data is very good on the jobs report or continues to be very strong. It's only around 173,000 at this point. However, that is just the automated figure. And then as we move through to Thursday, we'll be looking for the Chinese data, manufacturing PMI and non-manufacturing PMI coming out early in the Asian session. But I'll be keeping a close eye on the Aussie. So we'll be looking for retail sales there, strengthening to up around 0.3%. And then as we move through to the evening, we do have some manufacturing PMI coming out on the pound. I think that will be the next one just after the London Open. And then your employment claims on the US dollar, of course, still fairly high, up around 265,000 at this stage. The big news, of course, will be Friday. So if we take a look for Friday, I think that's what the market will be holding its breath for this week. And you've got your ISM manufacturing PMI coming out on the US around 52, but it has been in a fairly steady decline over recent months. Then construction PMI comes out on the pound, still fairly strong, an improvement up around 46.6, but it's below that 50 level. It is showing some kind of retracement. And of course, the big news will be your non-farm employment change on the US dollar. So 186,000 is the suggestion. Now, if we don't see a revision on last month's 255,000, we will see the unemployment rate, of course, improve to 4.8%. Well, that's all from me. I look forward to speaking to you all next week. This is Nathan Bray for TorFX.